Okay, it is 3:01, so we're going to get started. I am Tammy Ford. I'm with the Blunt Partnership. Thank you for joining in today into my home and into my sunroom as we talk about crazy issues that are going on with SBA and the tax implications. And it's just like so much information and just trying to digest it all. It seems like I'm spending my whole day looking, pulling, reading, telling, talking, just all this information is just crazy. So thanks for joining us today. We have got two young men, wonderful young men that have agreed to hang with us and depart some information. We've got Chris Trump. Hello, Chris. And we have Brad, if you know I'm going to say this wrong, Saygraves. Did I do it right? Good.
Are you still muted back, Brad?
Yes.
Yeah, you did it just right. That's perfect. Thanks.
And so what we're going to do is we're going to talk about, they are going to talk about, I'm going to listen, 4 different things regarding all that's going on with SBA and paycheck protection, this and all the different things. We're going to do 4 segments. So we're going to do a segment, kind of an overview, and then we're going to open it up to chat. So if you'll just type your question in, and I will read the question and they can respond just for the benefit of everyone. Plus, we are recording this and we'll be putting it out tomorrow. So with that, Mr. Trump, not the president, but Mr. Trump.
Yes, not the president. So
yeah, so I'll let you take it.
So before I do want to settle that. I don't have the ability to talk to Uncle Donald and get your paycheck protection program loan approved. So don't even ask that. Just take care of that right up front. No, not related. It's a tough time to be named Trump in the world because you either love me or you hate me. There's not much in between. And so, but sometimes people love me too much, and sometimes people hate me. So, but anyway, no, I'm very glad to help you guys out today, or hopefully we'll be some help. My name's again Chris Trump, and I am with Egerton McAfee, a law firm in the region, and Brad Saygraves is my partner, and we have been we are both principals in the he's a tax guy and gave me a look because we're actually members or shareholders of our corporation. But anyway, appreciate you guys getting on here. We're going to try and simplify this. I'm going to warn you ahead of time that the materials we're using were prepared for lawyers that we're trying to understand this, and so they're quite detailed. We would have maybe made this simpler, except for the fact that things are changing so fast right now. Around midnight last night, the Small Business Administration dropped a 40-page set of rules associated with the Paycheck Protection Program, and so we have been feverishly trying to just update our materials for that. We're going to make them available to you because I think they're still helpful. They're getting into a lot of detail that we won't cover today, but you'll have it at your fingertips in case you have any questions with regard to the different components of the Small Business Administration's assistance that they are providing for COVID, as well as a lot of the other CARES Act provisions. Without further ado, we'll go ahead and just jump in here. And again, just input any of your questions on chat, and Tammy will make sure that we're aware that you have some. And so what we're going to do is we're going to cover this in 4 sections. First section will be the Paycheck Protection Program. The second section will be the Economic Injury Disaster Loan Program. Both of those are under the Small Business Administration. And then Brad will then take over and he'll help on those parts too from time to time, but he'll take over and cover some of the miscellaneous provisions of the CARES Act that businesses would be interested to know about, and in particular some real valuable tax provisions that are in there as well. So again, thanks for being with us, and we'll go ahead and get started. So hopefully you guys can see that. Is that working now?
Yeah.
Great. Okay. Okay. So the thing to keep in mind here is these programs that have been that we're talking about are actually components of a larger existing SBA framework. And so it's important to know that for a couple of reasons. One is because they're existing for loan programs that are being modified or expanded by the CARES Act, the CARES Act is important, but there's also another set of rules and stuff that applies generally to each type of loan that you have to kind of keep in mind. We're not going to dig into that, but occasionally I will reference the fact that that's something that you'll need to know about to really be able to understand the program. So something maybe it's not in the CARES Act, but it's still applicable. So the two loans that are loan programs that are affected here are the SBA's 7A business loan program and the SBA's 7B2 economic injury loan program. Okay. And so both of those programs have been around for a long time. The CARES Act created a new set category of 7A loans called the Paycheck Protection Program. Okay. The Paycheck Protection Program it's a new type of 7A business loan. Okay. 7A business loans have been around for a long time. And so there's a lot of rules that apply generally to all the different 7A business loans. There's a lot of different types. And they're generally available to small businesses when they are unable to get credit elsewhere. And so, but the CARES Act came in and created this new category, which created a set of rules that are applicable to this new category loans, and relaxed some of the restrictions that are typically applicable to 7A business loans. So here's this right here, the primary features of the CARES Act in relation to the Paycheck Protection Program. It expanded the eligibility requirements for folks who can take advantage of the 7A Paycheck Protection Program versus regular 7A. It created a new loan where you could loan an amount that is roughly equal to 2.5 times your monthly payroll costs. That's capped at $10 million. Okay. Payroll cost is a term of art that we can get into in a few minutes. But these loans are made directly by the participating banks. They are not made by the SBA. They're guaranteed by the SBA. So if you did not pay the loan back to the bank, the SBA would pay the bank. So that way the bank is not out any money. That's why the interest rates that are being offered on these are pretty generous, because the risk to the bank is so low, because the SBA is guaranteeing that the loan will be paid if you don't repay it. The CARES Act also kind of broadens the 7A program by broadening the list of permitted uses of the proceeds, and we'll get into kind of what that is in a little bit. And that's an important fact. Important part of the information. One real critical aspect is these new loans that are being done, and you've probably heard about it. The banks are feverishly trying to get access to the SBA portal to be able to get these loans approved by the SBA. I'm sure probably all of you guys have been in contact with your banker and have submitted applications to be able to take advantage of the loan program. And so there's still just a lot of uncertainty. It's all developing so quickly. And so right now, I don't think I've checked in with a few bankers right before this call, and their portals were not open still yet. And they were supposed to be open today. So if you've not heard from your banker, that's probably why, because they probably haven't gotten their portal open quite yet. One of the keys is that to this CARES Act, payment protection program, is that you won't have to make any payments on this for at least 6 months. Okay. And you've probably heard of the next feature referenced here, and that is all or a portion of your loan actually might be forgiven, so that it turns in essence into like a grant. And there's some restrictions on that, and we'll kind of talk about them quickly if we can. The big thing to keep in mind here, though, is that the overall purpose behind this is so that businesses can keep paying their employees during this very difficult time of dealing with the pandemic and the negative economic effects that I'm sure all of you guys are facing in our firm as well. So a couple of links I think that are important. And the interim rule that came out last night around midnight, this is a link that will make sure that you have this PowerPoint presentation, you can see it, but that will show you the interim rules. There's it's kind of in a question and answer format, so it's pretty easy to understand. And so I'd encourage you to take a look at that. And then I'd also encourage this is a link to the form application. If you don't have that yet and you're still trying to, there was a revision that came out last night. That's the one you should be using now, what's on this link right now. So these are two important links that we'll make sure that when you get a copy of this, you can have. So let's talk about who's eligible. Basically what it comes down to, if you have less than 500 employees and you're a for-profit or nonprofit business, you're going to be eligible to apply. There are certain other requirements. You got to be in business as of February 15th, and you have to at least have been paying employees at that point as well. But most everybody's going to be able to accomplish, or check those boxes off. And so if it turns out, there's one little key here that I think is real important, and I doubt anybody here this applies to them, but for food services and accommodation sectors of our economy, that 500 number is based upon a per location basis. This is obviously a reflection of the fact that our restaurant industry has been injured so much greater than most of us have. My restaurant clients are looking at 80 to 90% reduction in revenues over these past few weeks. And I'm going to skip through a lot of these slides. So if you have any questions that I'm not answering, please be sure. One little thing that I want to just kind of bring to your attention in determining the size of your business for eligibility, just to determine whether you can actually apply and get a loan. SBA has some real complex affiliation rules where they look at other businesses that the owners of this business may have an interest in. And so it's pretty complicated. Don't worry about it right now. It might come into play whenever you submitted your application, but right now it's not that critical that you understand those. Just be aware that if your banker comes back to you and says, hey, the SBA is asking questions about other businesses that you're affiliated with, this is why they're doing that. One of the real key provisions of the CARES Act is that that you probably have heard this quite a bit, but they eliminated the 7A requirement that says 7A requirement basically is that you're only entitled to this loan if you cannot get credit elsewhere. They've eliminated that requirement. So any business that is essentially credit worthy is going to be be eligible and be able to get a loan. There's no requirement of personal guarantee, and there's no requirement for collateral. Those are two big exceptions to typical 7A loans. So it's really critical. Those of you who've gone through the process, you're probably already kind of versed in some of this, but in essence, the banks are trying their best to get the SBA what they need. The SBA is not giving us a lot of information in terms of the actual underwriting requirements. What information the banks have to have from you. It has been up until really this morning, it's been completely unknown, and now it is getting a little bit better. But it is a challenge.
Hey, we have a quick question.
Yeah, go ahead.
So here's the question. Are there any provisions for startup businesses, specifically a business where the owner is the only employee and was not yet paying himself?
My clarification on that is when, because Chris, correct me if I'm wrong, but if we've got self-employed individuals qualify for this, but don't they have to be making payroll by, is it February 15th?
Yes.
Okay.
Yeah. So, and if they don't have any revenue, so self-employed individuals definitely are able. It says very specifically in the act that self-employed individuals who regularly carry on any trade or business. So regularly carries on a trade or business is the key there. And then of course the requirement is, were they in business by February 15th? And so, so they will look at basically what your monthly payroll was for the time paid, or what your revenues are basically during the time that in payments to yourself during the time that you were in existence, because they're looking at payroll, actual amounts that you receive in compensation from it. So again, as a self-employed person, you're probably getting fees for associated with services, and that you would keep, and so you do have to have some payments to yourself that would be considered payroll for that to work.
Hey, Chris, just following up on that. His issue, or anybody that just started, the issue there would be is you're applying for the loan and you're trying to figure out which payroll costs were for the prior 12 months.
Right.
If you don't have any net income, because if you're a sole proprietor, right, we don't have to actually take it out of the bank account. We just have to show profit. And because that, at the end of the day, that's what the self-employed person is going to be taxed on. So that really becomes the issue, is you're not able to document what your monthly payroll costs are.
They are looking at that. So I asked the SBA that question specifically, and they're looking at what you would put on your tax returns, basically.
Yeah.
So you're like your Schedule C.
Yep.
And so that's what you would. So ideally, if you had that prepared for last year, then that would be what you would submit.
But if it was fresh this year, let's say they started January 1.
I guess you basically, I think you present it in the same format as what you would put it on a tax return and submit that. The big issue there is going to be, what does your bank need to feel comfortable? Because the bank is going to be the one who's making the determination as to whether or not you qualify and what a loan amount you get. So you just need to get your banker to a position where they feel comfortable. And the banks are kind of varying a little bit on what that looks like. They're developing their own set of, like, this is what we need to feel comfortable. Anything that, on payroll stuff, it's pretty easy. Your payroll taxes, are paid, and you have forms you submit to the state of Tennessee, and it's fairly easy. But it is a little harder in this scenario. And but that very question was asked of the SBA, and that's what they said.
Cool.
So I'm not going to get into all these bar certifications and stuff. Again, the one thing to keep in mind here in terms of for businesses that have employees, payroll cost, that term is defined very clearly. And this right here is all of the items: salary, vacation, sick pay, healthcare benefit and insurance premiums, retirement benefits you pay for your employees, and then payments of state and local tax assessments that are on employee compensation. So like your Tennessee unemployment taxes, what would be included there. And so you take those amounts and you multiply them by 2.5, you figure out what your monthly average is. So you look at the last year before you apply for the loan, and you figure out the monthly average, and then that's what that times 2.5 is what your loan is. Though it can't exceed $10 million.
Question.
Yeah.
Chris, what is the turnaround? Yeah. Okay, so you said the banks aren't ready for this yet, right? So you think it's
right.
Like hopefully soon. Once it starts that process, what kind of turnaround time are we talking?
Well, the concern is that, so this first round the concern is the first round of applications. So if you haven't got your application yet, you really need to do it ASAP. And so you would do that I would contact the current bank you have a relationship with first. If you do not have a banking relationship with someone who is an approved SBA lender for this, you can call the Tennessee State Small Business Administration, their district office, the Tennessee State one, and you can get that information from them as to what banks around here have are approved SBA lenders. It's also available on their website, okay, and you can find it on their website as well. But you need to get that application started very, very quickly, because everyone expects these funds to go very fast, and it is on a first come, first served basis.
So for those that need to know, on the bluntchamber.com website, under the coronavirus button, we have a place that have all of our local lending institutions that are part of or they're approved SBA, whatever that is. that they can do these loans. And the other question I had, again, what kind of time frame are you know, could somebody expect? I mean,
So they're saying if the portal gets up and running today, they were saying that distributions of the loan proceeds could happen as quickly as by the end of the month. So that's what we're hearing. That has not been put in writing anywhere that I've seen by the SBA. So just keep that in mind. The one thing I want to make clear that payroll cost does not include, this is a really critical important because it came out this past evening, and that is amounts that you pay to independent contractors. So a lot of people use 1099 folks rather than employees. Those amounts you pay to them are not considered payroll costs. It's very important to know that. The reason why is because the independent contractors are essentially self-employed themselves, and therefore they have the ability to apply for the loan themselves. And so a lot of independent contractors at this point don't realize that, and they're expecting to still get paid. But payments to independent contractors is not a permissible payment either for the loan. So keep that in mind. You need to apply yourself if you can tell your independent contractors to apply for themselves.
So that really hurts those, Chris. I think of people in the tech industry, or people that just rely on other businesses and kind of sub out that to other people, but they kind of think of it as their payroll costs that may be fixed, or even a percentage of what that person does for them. That really hurts those, because while they may consider that as an ongoing expense that they need to make sure they cover, they don't have, that's not going to be included in their calculation. They have to just go to W-2 wages,
right,
to actually run that number. So, okay.
And the other amounts kind of that you pay for, like insurance, et cetera. So that are included in the definition. I'm going to jump ahead here to what you're allowed to use the loan proceeds for, because I think this is going to be, because a lot of this stuff is already in motion. Again, you cannot use loan proceeds to pay independent contractors.
Chris,
yeah,
you're cutting out, buddy. Can you start again about 5 seconds back?
Can you hear me now?
Yeah.
yes.
Okay, great. Because a lot of this is already in motion in terms of applying, it's important to keep in mind what you're allowed to use the loan proceeds for. And this is the list, okay, of items. The important thing to remember here is that it does not include payments to independent contractors, okay? And so that's but it includes interest payments, rent, and your utilities. You can use it for that. And so, but there is a really critical, aspect here of that has come out. You have to make sure that you can only use up to, you have to basically 75% of the loan proceeds have to be used towards payroll. So that's new and just came out this evening. Okay, this past evening. So even though all these things are permissible to pay, there is a requirement that at least 75% gets paid for payroll costs. That's important, because if you don't use the loan proceeds as you're required to use them for permitted uses, you will end up with having to return that money back to the bank. Okay, you're not allowed to use it for that purpose.
And Chris,
and it will not be forgiven.
Okay, just to clarify there. So if we use 40% for rent and utilities, the other thing, and only 60% for payroll expenses, then we'll still get forgiven the 60%, but the last 15% will have to repay, right?
You may actually have to turn those proceeds back over now, not just repay over the term of the loan. I think the understanding is you have to actually return the proceeds. Once you get past, it's all measured. You have 8 weeks to use the loan proceeds properly. And 75% of your loan proceeds has to go to payroll costs incurred in those 8 weeks. So if only 60% of the loan proceeds is used for payroll, 15% would have to be returned, I believe, pretty soon after the 8-week period. That's the way that we don't know for sure, because the guidance doesn't say that expressly, but it implies it. It does say that you would have to return that portion. So it's also important for the forgiveness part. So it may just be that they're talking about forgiveness. The big thing is if you knowingly use it for improper uses, there's some potential liability to the SBA. And so you don't want to do that also for the owners who do so. The biggest thing is the safest play is to make sure that if you do get loan proceeds in this program, just use them on payroll till you get that 75% number. And then you can use it for anything you want. Oh, in terms of tracking the loan proceeds, everyone's in agreement. You need to use a separate bank account, put the loan proceeds in there, and then everything that's permissible to be paid out of it, you write a check from that new bank account, or maybe it's not new, but that separate bank account from your regular operating expenses.
I have a question.
Yes.
So is it true that once the money's gone, it's gone?
That is true. Yeah. And so which is interesting because today's the day that small businesses apply. Next Friday is the day that is scheduled for sole proprietors to apply. We assume they're holding some money back for those folks, but they haven't said they are. So it's a little uncertain. But there's $350 billion that has been appropriated for this program. And so when the money's gone, it's gone. Banks if you have an existing relationship with the bank, you should use them if they're in the program, because banks are giving priority to their good customers, the ones that they're existing customers.
Okay. So no more questions, I don't think, Chris, at this point about this section.
Let me just cut before I do anything else. I just want to hit on a couple of things because this is probably the one that everybody's thinking about right now because the timeline's very, very sensitive. And so we may need to spend a little more time on this than the economic injury loan, but the interest rate is 1%. Term, to the extent it's not forgiven, it's a 2-year term for repayment. You can always prepay anytime, and I already mentioned the 6-month deferral. And so those are some important facts. But the one thing I do want to touch on before we move on to the next section is the loan forgiveness. So what I won't get into the details of this, but basically what it comes down to, the act is trying to encourage you, if you get this loan, to maintain your payroll. Keep your employees on and keep paying them how much you've been paying them. To the extent that you reduce your workforce during the 8-week period following the loan origination, the date of the loan, to the extent you reduce your workforce, both in terms of in number of employees and in terms of how much you pay those employees, there is a reduction in the amount of the loan that can be forgiven. Okay, so that's the details are pretty complicated, and we won't get into those. But part of that important part of that's the pay, assuming you use it for permitted uses, okay, and 75% of your loan amount is used towards payroll costs. And if you don't reduce your workforce and you keep them at the same level and don't drop your pay basically by around 25% of them to them, then you are going to get almost the entire loan could be forgiven. Okay. And you would not owe anything, and it would be free money. And so that is the overall thing. Now, probably some of you are saying, wait, we've already reduced our workforce, right? And if that's the case, there is a really important, aspect of the loan forgiveness that I think you need to understand. And that is that there's a cure in here. So say you've reduced your workforce, or you're going to reduce your workforce before April 26th, and then you get a loan. Okay. As long as you rehire the people by June 30th and you use the proceeds to pay 75% of your payroll during the 8 weeks. Okay. So depending on when you get your loan, that 8-week time begins, and you need to rehire your people by that point and pay them through those 8 weeks. If you cure, to the extent you're able to cure the laying off and rehire people, or increase their wages to an amount in the aggregate, which is 75% greater, then you are going to be able to basically cure that reduction in your forgiveness. And so that's I just want to make sure I hit on that.
We have some questions, Chris.
Go ahead.
One is regarding independent contractor. payroll is based on net after expenses amount on the Schedule C. Question?
And if I can hit that one, Chris. So the payroll would be not, if they have no employees, then it would be essentially their net income. Yes. So that would be the amount based on Schedule C. But if they have employees, then you add that to the net income on the Schedule C to come up with your payroll expenses.
Okay, thank you.
Mhm.
I have two more questions right now. One is, if the business owner is also the owner of the building to whom rent is paid, are rent payments still allowed?
As long as the lease was in existence by February 15th, 2020, it should. Now, I will tell you this. Well, I don't think it'll have too much. The affiliation rules do apply, but they do not apply to this piece of it. Okay. So in terms of who you pay, yes, you can still pay yourself. It should be fine.
And I'm going to agree on that. I think, from a tax standpoint, it's not a deductible expense when you're paying yourself that money, but they haven't issued anything yet that says it has to be a deductible rent expense, just that you're paying rent. So from my perspective, unless they give us something different.
Yeah, and there could be more guidance that comes out. They have not given us any regular rules on. Really, the only guidance they've given us at this point has been on the loan amount, and because that's the first piece of the puzzle, right? And then now they've got a couple of weeks before they have to give you the loan proceeds guidance, and they will eventually, and they may disallow that at some point. And if that happens, this is as you get loan proceeds.
Chris,
Yeah,
you're breaking up.
Okay, sorry about that. I'm not sure what's happening here. But anyway, can you hear me now?
Yes.
Okay. So that's you had one more question. I thought.
Yes. So I have a question that I'm going to ask a question from someone. So if during this question, if their question doesn't get fully answered, are you okay if they reach out to you all directly?
Absolutely. My information is both Brad and my information is at the beginning on the first sheet of this PowerPoint, and you will make this available to them, correct?
Yes.
Good.
So the other question is, we had an employee quit right before this. Does this mean we have to rehire that position?
Not that employee. You just have to have the same number of employees. Okay. Your monthly average basically needs to be the same during that 8-week period as it was prior. And it's complicated. That's probably one I need to discuss more in detail with them. But essentially, you've got a period beforehand where they measure what your monthly average, full-time equivalent number of employees is. And then they compare that with what it is during the 8-week period. And that's the reduction.
And Chris, is there a buffer there of safety? Like if you just have a natural 5% decline?
There's not a buffer on the number of employees. There's a buffer of 25% on the amount you pay your employees.
Good.
So it contemplates the idea that you may need to reduce your pay for cash flow purposes, and it allows you to do that.
Perfect.
So we've spent a large amount of time on this topic. So we're at 3:34, and we've got 3 more segments to cover, right?
Yeah, we'll hit the highlights here. This one will go really quickly, I think.
Okay.
So the economic injury disaster loan is, if you haven't applied for this and you have some damage to your business through this, you need to go ahead and do so. It's a very easy process. The website that's on this link that is in this PowerPoint right here on this slide, it's a very streamlined application process. It's just a handful of questions per page. I encourage you to do so if you think that even if you not sure if you qualify or not, I would still encourage you to do so, because it gives them the opportunity. They can always tell you no. These are loans made directly by the SBA. Okay. So, and so it's your application is going to the SBA, and I'm going to hit on just a couple of highlights on this. Generally speaking, this is a similar small business definition, and similar sole proprietors, independent contractors, they can apply. So eligibility is about the same as the other one, with some differences. like the restaurants and such is a little different. The amount of this is determined by the SBA based on how much they feel like you've been economically damaged, okay, as a result of the disaster. And just so you know, these are only available in the times and areas that are affected by a disaster. Okay, and the entire nation is a disaster, has been declared a disaster by the CARES Act, essentially. These loan terms are a little higher, 3.75%, and it could, but the length of it's based on what you're able to, what they feel like you're able to repay based upon the damage that you've incurred. It's determined on a case-by-case basis. Typically what will happen is you'll be assigned a loan officer who will help you walk through and figure out what is the what is the loan amount that you're entitled to, as well as what your repayment terms were. The loan proceeds essentially are based on what you need to carry on your ordinary expenses during the period of economic injury. Okay. And the CARES Act has loosened these underwriting requirements a little bit too. There's no credit elsewhere requirement like we talked about with the PPP loans. A personal guarantee is not required if the loan is $200,000 or less, which may for several of you on this call that is likely to be the case. And then collateral may be required, but the sufficiency collateral is not really the issue. The CARES Act allows them to make the decision, the SBA to make decisions solely based on the credit score or whatever method they want to choose. So it's been quite a bit. Now, this is one of the things that's gotten the most amount of press is that if you apply for an economic injury disaster loan, this is why most people are probably going to apply, okay? Generally speaking, you are entitled to an advance of the loan proceeds at fairly quickly, say within 3 days. We're hearing from SBA folks it will take longer than that due to the high volume. But you can get $10,000 pretty quick as an advance on that loan. And that $10,000 is not required to be repaid if they turn you down for the economic injury disaster loan. Okay, so it turns it being a grant of $10,000 that I think a lot of small businesses will get. And that, again, if you go back to who's eligible, that's self-employed folks, and let's just go back there real quick. It is self-employed folks, sole proprietors, independent contractors. All those folks are entitled to apply. Nonprofits.
So Chris, I have a question about
Sure.
that. As an independent contractor who works mostly from a home office, can they count their rent?
I would say they're I don't think they're going to, well, so they're going to look at what you need to have in order to establish to continue your business during this time of economic injury. Okay. The what you can spend it on does include rent. But it's really that $10,000 though, this is what they limit you to spend it on. So, this last one here, we're paying obligations that are met due to revenue losses. I mean, that's a pretty significant one. Rent, maybe if again, the SBA is going to have so much discretion on this one. It's not formulaic like the PPP loans are. So they probably will disallow that, I would think.
And here's another question for you. Our employees are paid base salary plus billable day stipend. Would we use the average billable time stipend added to base salary to compute salary cost? And the second part of the question is, if this exceeds $100,000 per year, is it limited to $8,333 per month per employee? Is that correct?
Yes. Yeah. So we didn't talk about that, but in payroll costs, you're not allowed to on an each employee basis, you in determining both the loan amount and in determining how much is forgiven, the amount you pay an employee over $100,000 is disallowed. Okay. And so, yeah, you're capped on terms of their salary at $8,333. That's what that divided by 12 is, right? Brad, you're the math guy.
Okay.
Just as respects their salary.
Okay.
Yeah, and Chris, there's
it's very important we make the distinction here that's related to the Paycheck Protection program. It is
Right,
not.
not
That's
EIDL.
that is not an EIDL loan. Okay, that's a different. That concept of payroll is not used here. The EIDL loans are a separate loan program that is administered by the SBA. And both of them potentially are permits can be used by each business. The big key is if you're going to use the EIDL for payroll, you're not going to be able to get a PPP loan as well. Okay, you're not allowed to. Sorry, let me say that again. Let me just get to the slide that says it so you can see exactly. So yeah, the EIDL advance can be used for any EIDL purposes, which is it's broader than this. It's really kind of all your. That's just an example. And the EIDL. Hold on, I got the wrong one here. Here we go. It's the last slide. Hold on.
They can have both loans, right, Chris?
They can have both loans, but you
EIDL.
cannot double dip. Okay,
Yeah.
you cannot double dip. So you cannot use the you.
EIDL
If
for
you look at
payroll.
this, if your EIDL loan is not used for payroll purposes, then it doesn't affect your PPP loan. If your EIDL loan is used for payroll costs, your PPP loan must be used to refinance the EIDL loan. Okay.
Yeah.
And your EIDL loan can be used for payroll costs beyond the 8-week period. Okay. It's just you can't double dip.
Yeah.
Okay, so we have about 18 minutes left. So can you bring it in for us? Or maybe Brad, do we want to switch to you for a minute?
Well, I was going to ask Chris, is there anything else on the EIDL that you want to just take a minute, sum up, give a, best thoughts on which ones to pursue, or how to pursue?
I would just say what I would encourage is that, no matter what you're doing on the PPP loan, if you've been injured, you should apply for the EIDL loan. Okay. For two reasons. One is this is probably the loan program that's going to be more likely to be given more money in the future, in my opinion, because it's an existing program and there's going to be opportunities there, I think, for that. Number two, it's being administered by the SBA directly versus the banks, and so it's a different. They will help walk you through, and it's designed for disasters, is to help your business survive. 3, that $10,000 loan advance. You get to keep that even if you don't get the loan. So I would encourage you to do that as well, to make sure to do the IDL as well. Go ahead, Brad. Why don't you take it from here on?
I am. Sorry, I'm just getting my presentation up past the EIDL.
All right. So I'm going to stop sharing now.
And then I'll get mine up. Because you covered... What slide did you end on, Chris?
I ended on slide 41.
Okay. And guys, in my time, I'm going to basically give you the potpourri of all the other changes that we have going on in this, in the hopes that, let me get this out of the way, make sure that's going on right. Actually, that's the one I want to use. Okay. Can everybody see? It should say bankruptcy on it. Is that right? Yep. Good. To give you just some of the other provisions in there, one of the ones we will hit on is there's payroll tax credits and changes. There's unemployment tax provisions that I want to hit. But some of these will apply if you can't get the PPP or the EIDL. So I'll skim through some of them. Tammy, please feel free to stop me anytime there's a question that comes in, but we'll hit as much as we can. So on bankruptcy, one of the things they changed was the limit for Chapter 11s from 2.7 to 7.5 million. They are, if that business gets a PPP loan or some other loan that is COVID-19 related, that income that the business received is not treated as income for purposes of filing for bankruptcy. So it helps them as far as their calculations. And it also extends the time for a Chapter 13 from 5 years to 7 years. On the unemployment provisions, by the way, there's a lot of provisions. There was the Families First Act that came before CARES. That's the one that basically said, hey, if someone has to leave the business because they're sick, If you're, there's another provision that said, if essentially you lay them off, that the federal government's going to give you a credit for the amount that you have to pay them under that. So here, what they did was they added not only to the amount that somebody could get on a weekly basis, but also for the period of time that they're eligible for unemployment. Section 2107 added 13 additional weeks of unemployment benefits for the after state unemployment stops. And it also adds $600 per week to the amount of unemployment you can get. So if you're a business owner and you're trying to figure out what works, a lot of times if you're running the numbers for Tennessee, it's $275 a week plus the $600 now. It may be, if you're struggling, it may be more beneficial to lay them off. They may have a amount of income coming in from unemployment that may fully cover their household expenses or be a whole lot closer. And it may give you breathing room as a business to go, hey, hop on unemployment for a bit, then I'll bring you back, and we'll keep going once we get through this blip. So just something to be thinking about, that unemployment is there in a better way than it was a month ago to help employees if you have to lay them off. There is this is the individual recovery rebate. They loosened the rules a little bit for those on Social Security this week. If you're an individual, you're going to phase out at $99,000 of income. If you are married filing jointly, it's going to phase out at $198,000. Once you start adding kids, the credit comes down because you have an additional $500 credit. So that adds to that number. So if you have multiple kids and you're married filing jointly, the number is going to be above $200,000 of income because of that $500 credit. The way it comes down. So I'm sure most people have already looked at that. And I'm going to hit these real quick and then get to the other ones. But on retirement funds, they are increasing both the amount you can get from 50% to 100% and from 50,000 to 100,000. If you keep the distribution, you can keep it for you can recognize the income over 3 years. So if you have to draw on your retirement, you can recognize it over 3 years instead of one. You can also repay if you want to over that 3-year term as well. You have to take that out within 180 days of last Friday, though, of a week ago, in order for it to qualify under these loosened restrictions. Also, there's no RMDs going out this year. They reduced that for those that are in retirement. From a charitable perspective, they added an above the line deduction. So that is, if you don't itemize, you can still add a $300 charitable deduction if you gave cash. If you're an individual, and let's say you give a lot of money, but your AGI, your actually taxable income, is low, for 2020, your charitable deduction can wipe out all of your income, where that used to be 50%. For corporations, the threshold or the limit goes from 10% to 25%. And then those that contribute food inventory, that deduction goes from 15 to 25% as well. If you're in a flow-through entity like an S Corp or a partnership, you're going to take that on the owner's return. Payroll tax changes. If you do not qualify for PPP, okay, then I want you to be looking at this employee retention credit. This is a refundable payroll tax credit. And by refundable, that means if you have I need to pay you this much, but I get a credit of this much, they won't just take it and apply it to the next tax return, your next 941. They're going to take and issue a refund. Now, the way they're doing this in practice is you go ahead and compute the number now of what your payroll of your refundable payroll tax credit would be, this retention credit, and then you can file a form 7200 to claim it now. So essentially, the way this works is if you paid 10 employees at least $10,000 during this period, the credit is half of that $10,000, so $5,000. So you would be entitled to a $50,000 credit against your 6.2% Social Security. So on a $100,000 credit, or excuse me, on $100,000 of payroll, your 6.2 is 6,200, right? That's your 6.2%. Well, if you're entitled to a $50,000 credit against that 6.2, you have a large credit left, which that may be a substantial source of income if you tell the IRS, hey, listen, here's what my payroll would be, here's the 6.2 and what it would be. I want the credit against that. And oh, listen, I get money back. Go ahead and write me the check. By the way, there is a difference here on whether you are more than 100 employees or less than 100 employees. If you have more than 100 employees, the amount of those wages that qualify for this retention credit are only the ones that are paid while the business is shut down. So if your business is not shut down, probably not going to qualify if you're over 100 employees. If you're under 100 employees, then you're good. It's any wages paid between March 13th and December 31, 2020. This could be, again, if you don't qualify or not able to get funds in PPP, this might be a great option to just get some funds back, because that means you're not paying the federal government, that's 6.2%, but then you're also getting a refund back against it. This is the federal government saying, hey, don't pay us tax dollars and we'll get you an advance against it so that you've got more money available. I do want to say, if you are going to apply for this, the best and fastest way to do it is to fill out the form 7200 and submit it by fax. Not all of these forms are submittable by fax. They made this one submittable on purpose so that they could process it faster and get the payments out faster. This is one that they're saying, hey, if you don't qualify for these other ones, please use this as a way to be eligible for additional funds. Okay. Now, if you don't get the PPP or the EIDL loans, all right, if neither one of those you either qualify for or you apply for, but you want to basically delay your payroll taxes, this is another one where the 6.2 Social Security tax that you're required to retain, you are eligible to defer paying that tax until next December. So we get it on more than a year and a half delay on what we have to pay on the Social Security tax, okay? So half is payable next December 2021, and the other half is December 31, 2022. So if you're a business that is ongoing, you can't, but maybe you're doing well enough, but not great, and you go, man, I'd really like to not have to be paying all these payroll taxes. This is not a forgiveness of that, but it is a delay where you don't have to pay this. You can spend the money. You don't have to hold it. You can use it for cash flow. And then you just have to, what you really need to do is keep track of it as a liability that, hey, this number on 12/31/2021 is going to be $20,000. I got to make sure and put on my 941 is being due and paid then. And the same for December 31, 2022. So those are both areas where the government is saying, keep some of the money and use it for the best things you can. Keep your business afloat, okay? Now, the next part is, I'm excited about it from a tax perspective. You know, that's saying something when the tax attorney gets excited about anything tax related. So on this one, when they passed the 2017 Tax Act, they changed NOLs, net operating loss carryovers. So if you went out and bought a big piece of equipment, you did it through a loan, you may be able to expense it right away under 179, and that may reduce and wipe out all your income for the year. But the problem is you couldn't carry it back. So if you had that expense in 2018, you had negative $50,000 of income. Then if you're trying to get back to recognize that, what we used to be able to do is go back and file an amended return for 2017 and use that loss to offset the income tax obligation for 17 and then get a refund and get cash back. Well, they changed that in 18 where you can't go backwards anymore. You can just carry it forward unlimited. This basically wipes that out and says that doesn't apply for 18, 19, and 20. So if we have any losses this year, we can carry it back to 19 and 18. Also, if we had losses in 19 or 18, we can go back and amend those returns, take them back to prior years, and again, hopefully filing an amended return, get additional funds back in our hands that we can utilize. So,
okay, so Brad, I'm not a tax guy, right? So I'm sitting here. What you're saying to me is, to the extent I paid income taxes in the past, like say I get a really big loss this year because of the economic condition, right? So I have a huge loss, and if I paid income taxes over the past 5 years, okay, so go back, 5 years even. Okay.
well, you can go only to an open statute, which may be 2016, because in 2016 we filed in 17.
So if I
It's a
paid
three
taxes in 2016, 2017, 2018, and 2019, if I paid tax, okay, at that point, I could potentially get some of those taxes back because of my loss this year. To
Yes.
help me carry me through the loss this year.
Yeah, and let me add one piece to that. If you get the PPP, you will probably gonna show a loss. Like, let's say you get $1 million from the PPP program. That's non-taxable income. So it's cash that you get in there, but then you have all these expenses. That may cause you to have a loss. And if it does, under this, unless they add some regulations or additional guidance, you could then take that loss and now carry it back to 1918, offset that income, and again, be eligible for a refund and get that money back. So that's something where you got to talk with your CPA and make sure it makes sense that the dollars are big enough for the cost to go in and amend.
So we have a couple of questions.
Oh, good.
So one question is, does the 5-year carryback for losses also apply to S corporations?
Yes.
Okay, okay.
Sorry, I'm thinking through here and I'm going, is there any reason that it's not? Their flow through, S corps are flow through. So if they've got a loss, then what you're doing is you're going back, you're going to have to issue new K1s for all the owners in order to say, hey, we didn't have income in this year, we now have a loss, which then requires all the owners to go back and file amended returns. So yes, they can. It just impacts all the owners as well, which is probably good because then all the owners can remove income from their returns and get refunds as well.
So we're right at the 4 o'clock hour. Do we want to, Brad, did you have a lot more or?
I mean, I think I've only got, let me see here. I think I've only got, 14 more slides. That'll take me another half hour, but no,
Okay.
we'll go ahead and be done. I'll skip through here and just let everybody see the topics that are in here. But of course we'll make this available for everybody. So they've got it. By the way, there is a provision in there that says if you're the president or, any of the elected members of Congress, you can't qualify for any of these loans. So apparently they didn't want Trump's family to get a hotel loan on this. So
Also you're going to send a very simple version out.
Yes. Yeah. So we're in the process of updating our kind of fact sheets on these programs. And so that's on the 2 SBA programs. And so once we get those completed, we will send that. And my understanding is, Tammy, you can actually forward that to the recipients because they had to put their email in here. So
yes. So we'll send both of these slides, and then we will send the sheet that you're talking to. I have a one other question. You said that last night there was more things that came out. So at what point does it stop, or does stuff just keep coming out? Do you know what I mean?
It's going to flow. I mean, so they're basically yesterday came out, basically, this is what we need to be able to approve your loan. And that's just about it. So there's still a lot of regulations to come. And so it's going to come out in a trickle. Hopefully by the time we need it each time.
Okay. So I'll just pause for a moment to see if there are any other questions before we close out. At the end of this, we will be sending a poll. And so you could fill that out. We intend to continue to offer topical things as things uncover and things develop. Very helpful. Chris, Brad, thank you very much. Y'all consuming a lot of information. I'm glad it's you and not me. You know, if somebody wanted to, folks need to call their financial person and say, look, I don't really know which one of these I need to do. That's really the best thing for them to do.
Yeah, I mean, I would suggest them talk to their accountant, talk to their banker. They're welcome to call us as well. We are helping people figure that out. In addition to those folks, there's some legal determinations that have to be made that we can be of assistance with, and we can also, you know, help them get the right people if they need other expertise. And I would say is, you know, we're trying to, as these updates come out, you know, we're happy to provide additional information to you guys. So just, you know, just let us know if that's helpful. So. And
I see where you've answered the question about someone applied today. What kind of turnaround time was the question? And the response was, if the portal was open for them to submit, they may not have been able to do that yet, because you said some of them aren't ready, right?
Yeah, the most prolific SBA lender in town. It is I think one of the folks here is on this talk, and it's United Community Bank. And I just saw an announcement that they think their portal will be open tomorrow at 9 a.m. So they're still opening.
Thank you. Anything else? So Chris, Brad, come back and join us again. We'll do it again, maybe even next week. Who knows, right?
Love to do it.
There'll probably be more information.
So did we do the poll already? Okay, so poll is on its way, and then
Hey,
I think, I'm sorry?
we got it.
Got it?
Yeah.
You can't fill your own poll out, right?
I am.
Apparently I can. I think it was awesome. So.
Are we good with the PowerPoint so that we can send to everybody?
Yeah,
Okay.
we'll email it to you right after this.
Sounds good. Thank you all.
Thank you, guys.
Thank you.
Bye-bye.